The S&P 500 and the Nasdaq 100 finished at all-time highs. Are you surprised? It was in striking distance to hit that 4,500. You're watching the Stock Market Brief Show. My name is Michael Silva. Today's date is 8/25/2021. This is the show that we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Another high. Surprise. Today's episode is going to be short and to the point, especially that not much price action took place. Going to kind of nail on a couple key subjects. Timestamps are going to be in the description below. Let's head into today's show. All right, everybody, welcome back. Starting off at the dashboard. Over here on the left-hand side, you can see the indices and how they performed. Pretty much flat across the board. VIX down. As far as the performing sectors, the 11 sectors that make up the S&P 500, financials led the way. If you watch my YouTube shorts, I posted actually something out last night, and it definitely looked like financials was going to start catching somewhat of a bid here. Sorry I put that out in a short. I could have added it into the Stock Market Brief Show, but it was something that I paid attention to after the fact. And what do you know? Financials took off. But we'll talk a little bit more about the bonds and yields in the bonds and yields section and what I kind of see happening here. Let's get into the S&P 500 on the daily time frame. Here we go. High of 4,501.71 cents. All-time high. Small range candle once again. I'll get into the volume here. Let's look at the SPY for volume. Look at it's almost non-existent. I mean, what is this? No hedging activity taking place. One could look at it like that. Another thing to be looking at is this divergence from the move to the downside, spike in volume, the move to the upside, decrease in volume. Also, one could note that on Friday, we had the Jackson Hole Symposium, the summit. We have Jerome Powell coming and talking. You can see that on the Kansas City Fed YouTube channel on Friday. But yeah, it's just interesting. Volume's completely just non-existent. Tells me that there's a possibility for when volume picks up, I think that we're going to see a pretty significant move in either direction. Typically, these small range candles can lead to larger range candles at points. So big move, now momentum is slowing. That's how I'm reading that. But if we look at the 15-minute time frame, I mean, look at this. All like we're, trillion-dollar, multi-trillion-dollar market cap, and the markets, I mean, it's just staying between like two handles. Like, what the heck's going on here? It's pretty crazy. And my only best bet around this is just simply because obviously we have the Fed meeting coming up on Friday, so people are postponed. And each new high that we're seeing is being built on a negative divergence for whatever that's worth. Let's look at the Dow Jones. Well, I'm going to look at the 15-minute time frame. You can see here, just continue to grind along this upper trend line. Negative divergence still building. We have a gap above us, gap below us. Those can act as support and or resistance there. Nasdaq 100. Nasdaq 100, we're still outside of the upper daily Bollinger Bands. You can see here small range candles as well, and we're still tagging this trend line that I'm kind of keeping a close eye on. Price percent oscillator did do a bullish crossover, so that looks pretty good. But I mean, I would like to see the price digest before it goes higher. If we get a strong move to the upside, it's going to be very overextended, and I just wouldn't really see some follow through that. I just, I would like personally to see digestion before making a larger move. And you can see here on the 15-minute time frame, we're all boxed up here. If you take a look at the volume profile, we have a little bit of volume here, more volume here, a little bit of volume here. Sometimes if you look at this as a distribution curve, sideways distribution curve, sometimes it reverts back to the mean. So if you get a couple of deviations out, it comes back to the mean. That's one way to look at it. That's one way that I learned to look at it. So yes, new high, negative divergence. Perhaps we come back into the middle of this channel and or just tag the 5-day moving average or fill the gap. That can act as an area of support, and that could be a good risk to reward trade to keep an eye on. Play the bounce, right? Buy the dip. Russell 2000, still range bound. We are in the center of this. Now, financials had a really good day, and various SPACs and meme stocks had good days too as well. That benefited the IWM. Financial stocks make up 20% of the IWM. So we're going to kind of focus in on a couple of the financials here soon, but you can see we're at the middle of the range of the channel. We talked about yesterday. That's typically where some profits might be taken. And you can see today we had a big strong day and we sold off slightly there at the end of trading day. And if we bring up to the 15-minute time frame, we're watching this trend. Okay, the morning it went below it, but it didn't close below there, so it wasn't necessarily a real trend break. But we did close there beneath it on a trend break. And you can see the RSI is getting, it can move to oversold very, very quickly just by hardly moving. So yeah, we tagged the upper range, this area of resistance. Now we're starting to see it sell off slightly here. We'll see what tomorrow brings, as well as going into Friday. Let's look at a couple commodities before we go into the bonds here. And we'll also look into the currency. So gold down on the day. Look, I'm not really sold on this big rip up here until we start getting above 1840 and holding that level. And then the next level would be 1920. We were running right into an area of resistance, all these moving averages, and we sold off today, $17. I'm not honestly too shocked about that. If we take a look at silver, silver's also potentially forming a bear flag, down 12 cents on the day, only 0.5%, not nearly as well, actually, how much was gold's percentage? Yeah, not nearly as bad, half as bad as gold. So we'll continue to watch this. We had the bullish crossover on the PPO, but it is still below zero, and we are trending down clearly. Below the moving averages, lower highs, lower lows. So got some work to do. Oil, another big day, up 1.21%. Now we're moving back into these moving averages. This is a very aggressive move, so I'm interested to see what plays from this. I don't see this just going like that. Can it? Yeah, sure. We've seen moves like crazy moves before, but these large range candles, typically what's going to happen is we'll see large range, smaller, a little bit smaller, and then we'll start seeing momentum kind of die off, and then hopefully we get a little bit of a pullback retest, and then we can start moving from that. But you don't want to just see these big rips to the upside, because these big rips up to the upside, you'll typically get 50% plus retracements. And as it stands right now, look, we have a high, lower high, lower high, a low, a lower low. So it's still trending down. It still has work to do. I would much rather see this progressively build than see a very sharp increase. But that's what we're seeing right now, a sharp increase. And that's helping some various energy stocks. Copper, very similar situation here. Right, we broke out, came down, tried to get back up, got rejected. We had a high, a lower high, a lower high, and now we're starting to see obviously lower lows, but then we're starting to see price really try to pick up fast to recover these levels. And like I said, I don't really like these aggressive rip your face off type rallies, because they can get retraced here pretty quickly. They can get followed through a large amount of supply. And we'll continue to watch this and see how this develops, but I would like to see this base out, digest, and then kind of slowly build back up to feel more confident hopping in to various copper stocks. Let's look at currency. The dollar down slightly on the day, but we're still above this trend kind of zone that I'm following right here. Until that breaks, then I'd say, okay, yeah, I think it'd be a lot safer to start seeing gold pick up, silver pick up. But as it stands, the dollar's been putting in higher lows in the short term, and it's really been going sideways ever since. We had that recent breakout, but we were talking about, okay, that's a little bit too aggressive of a move. Perhaps we're going to see it digest. Well, guess what? The dollar's digesting. Perhaps this strong move that we're seeing in other various areas are going to digest and pull back. And like I said previously and multiple times, the dollar moving down, that benefits commodities, and it's definitely been benefiting the S&P 500 too as well. So if we get all of a sudden strong moves to the upside, it might not be a great thing, obviously, for commodities and equity markets. Consider it a flight to safety. Now let's hop into bonds. Okay, so bonds, down day, the TLT, right? Pretty decent size range candle to the downside. Almost down 1% coming into the 50-day moving average. Still in an uptrend, short-term uptrend, right? We recaptured all these moving averages. We have a high, a lower high now, a low, a lower low. I would say if we start taking out this kind of flag position, that would be a little bit more cause for concern, but we still have not yet. Now, let me bring up the TNX. The TNX is the 10-year yield, and you can see here it's trying to recapture these moving averages, and we have a short-term low, a higher low. We have this little high right here to a higher high, so we'd have to start getting above this to a 100-day moving average to feel more confident that the 10-year yield is going to go up. Now, this is perplexing to me, because if the 10-year yield continues to rise, well, that's going to put pressure on tech, right? If I pull up this chart right here, you can look at the TNX up at the top and XLK technology at the bottom, and when the 10-year yield is falling, what benefits is various tech stocks. And what's been holding this market up are just a few big FANG stocks, right? These big tech stocks. So if we start seeing the TNX really start to move here, and then bonds, TLT, starts to head lower, well, I mean, that's going to put pressure on the FANG stocks. As you can see here, this has been going down. This went up. When we were going up sharply here, this point, you can see XLK down to sideways price action. It struggled during the rate at which the 10-year yield is rising. So if you really look right here, in February, that's a pretty aggressive move in the 10-year yield. The rate at which that's changing is very quickly. And then you can see here, bam, right? XLK went down from 140 down to 127. All right, and then it wasn't until really we started rolling over here in mid-March is when technology really started picking up pace. So be mindful of that. All the short-term moving averages were back above the 5, back above the 10, back above the 20. And typically when you see these type of moves, boom, like this, you can get carry, you can get follow through. So we tried to do it here. We came down, reversed a little bit, but now we're right back up. So if we start taking out this 1.4 area or 14.0, you know, that could signal, okay, the trend is changing here. XLF, so financials. What benefits from a rising yield? Well, the financials do. And as you can see, the yield, pretty decent day today, right? Up 4% on the 10-year yield or on the TNX. Well, financials benefited from that. They were up 1.18%, and they were the top leading performing sector. So what you need to pay attention to is just kind of this intermarket principle. So a big thing to focus on, and why I'm kind of nailing this is because we don't know exactly what's going to be taking place on Friday or during this Jackson Hole virtual meeting. So just be aware this is not the time to really push all your chips in unknowingly what's going to come from all of it. I would imagine the main thing to be paying attention to on Friday, and then you also want to let the market digest it a little bit, because you'll notice this, the market typically responds in the wrong direction first and then it reverts back. So watch the bonds, watch the bond market, see what it's doing. Hey, if the yield starts rising higher and that starts digesting to the upside, okay, well, technology might not be the place to be, but financials might be a stronger position. And if you watch my YouTube short on financials, yes, we talked about this being a risk mitigation point, but it has the possibility to make a full short-term measured move, measuring from this low to this high, and this being kind of the drawdown to the 61.8% retracement level, a full measure move to be just right around $40. So we still have a couple bucks to move for financials if that's the case. All right. That's all I got for you on today's episode, everybody. Hope that helped out, and I'll see you back here tomorrow, most likely. If not, on Friday.